US President Donald Trump announced a trade deal with the European Union aimed at fundamentally rebalancing their economic ties. The EU, with a nominal GDP of approximately $20 trillion, about one-sixth of the global economy, is the world's second largest economy. Germany, France, and Italy account for over half of the EU's total output.
We have stabilized on a single 15% tariff rate for the vast majority of EU exports. This rate applies across most sectors, including cars, semiconductors, pharmaceuticals. This 15% is a clear ceiling, so no stacking, all inclusive.
The deal modernizes the transatlantic alliance, granting Americans unprecedented EU market access. By 2028, the EU will buy $750 billion in US energy and invest $600 billion in the US.
This started months ago, this negotiation. So we knew pretty much what we were getting into, and we were able to make a deal that's very satisfactory to both sides. So it's a very powerful deal. It's a very big deal. It's the biggest of all the deals. It will be the biggest of all the deals. So.
The EU will remove tariffs on US industrial exports, expanding market access of American goods. It will also pay a 15% tariff to the US on autos, pharmaceuticals, and semiconductors.
In practice, this was imposed by the United States and the Trump administration, which use all the levers and also some form of coercion, basically, to get an agreement which is unbalanced and, of course, favorable to the United States.
Sectoral tariffs on steel, aluminium, and copper remain unchanged, with the EU continuing to pay 50%. Both sides will discuss supply chain security. The EU will invest $600 billion in the US during Trump's term, on top of $100 billion annually.
There is also one part on purchases of US gas and potentially additional EU investment in the US. Now, this is a quite delicate part on which we do not have much detail.
The US and EU will tackle non-tariff barriers in food, agriculture, streamlining sanitary rules, and in digital trade, keeping zero duties on electronic transmissions. The EU is also committed to major purchases of US military equipment. The Economic Brief, DD India.
Well, Dr. Niranjan Banik, economist, is still with us. Dr. Banik, is this deal going to set the EU back quite a bit? Because the EU's economy is barely able to prevent a recession. It grew 0.5%.
In fact, this is a deal which Mr. Trump, I think, is a clear winner. Because if you look into the EU and the US trade, EU happens to be the largest trading partner for the US. Almost $2 trillion dollar trade happens between these two regions. Now, earlier, Mr. Trump was threatening to put a tariff of 30%. Now, because of this deal, he has agreed to put a tariff of 15%. But at the same time, the US defense industry as well as the energy industry, these are the biggest winner from this deal, because what they have promised, something you mentioned, European Union is going to buy defense equipment worth of close to $600 billion and they are also going to buy energy because they are, the idea is to shift their procurement from Russia to the US in terms of their energy requirement. And the problem is with some of the major automobile manufacturers, be it in Germany or in Italy, because the tariff on steel is still put at 50%, which means the input cost for manufacturing automobiles, be it for Volkswagen, be it for Mercedes-Benz, be it for any other European-made cars, these are going to get the brunt. Not only the automobile manufacturing industry, but also the defense industry in the US, in the European Union. They are going to get the hit, as well as the pharmaceutical sector. Because what we see in this 15%, none of these big export items by the European Unions are covered. So basically, because European Union is embroiled in the war with Russia indirectly, they had no option but to bow down in front of the US in terms of their demand, because
Yes,
what
Dr.
they were
Banik.
thinking.
Right. No, let's move on to also the outcomes in terms of this transactional approach of the U.S. president. How quickly is it going to lead to regional trading blocs emerging, also alternative markets gaining prominence? Because I mean, how long can the world actually take this sort of like you did mention, it's pro-US, so it's looking like one-way traffic in a sense across the world.
So the thing has already started to happen. Like India has already signed a FTA with UK. We are in the process of finalizing another FTA with the European Union. So everyone is trying to look into this kind of regional trading agreement, given the kind of disruption which has been brought in by Trump's tariff, because at the end of the day, this kind of tariff mechanism is not sustainable in the long run. I'll give you an example of Argentina. Argentina, in the start of 20th century, early 1910 or 1920, it used to be one of the largest economy in the world, even touted to become the largest economy, surpassing US. But then what started happening is they started following a protectionist policy like what we are seeing happening in the US today. Over a period of time, they lost competitive advantage. And now we all know Argentina has actually lost the battle.
Indeed.
So I think going forward, good sense will prevail, and you will see the tariff thing coming down over a period of time.
We leave it there. Thank you very much, Professor Nilanjan Banik. Thank you for joining us and putting all this into perspective for us.